In this question, we are being asked to identify the total figures that should be included in the company's statement of financial position at the 31st of December 20x5. We can see from the options available that we are looking for the current assets balance and the current liabilities. We can see that we've got three options to look at in order to calculate this figure, and so I would need to set up workings for those amounts and set up a table for current assets and current liabilities so that I can capture the amounts. For the first issue we need to look at, it says that on the 1st of January 20x5, the company made a loan of $12,000 to an employee and it was repayable on the 1st of January 20x6 with interest at 2% per year. We can see that we are currently looking at the 31st of December 20x5, and so this loan was repayable straight after our year end. We can set up a working for this answer. In working 1, that the loan of $12,000 is repayable to the company straight after the year end. These are amounts due to the company and so as a result should be recognised as an asset, and so therefore our $12,000 should be put into our current assets balance. What we also have to do is include the working for interest. We are told that the interest is 2% per year. So therefore we need to take the 12,000 and multiply by 2% to work out what the annual interest was. This comes to $240, and like the repayment of the loan, it has also not been paid as yet. And so as a result, the double entry for this is to debit accrued income and to credit interest received. Accrued income is on the debit side and it belongs in current assets, and so therefore our 240 should be added to our current asset balance. In our second issue, it tells us that the company paid an annual insurance premium of $9,000 in 20x5, covering the year ended to the 31st of August 20x6. So once again, we can set up a working, and this time we should use a timeline so that we can see what's going on within the year. We can see that our year end begins on the 1st of January and ends on the 31st of December, x5. What we're also aware of is that our insurance premium ran to the 31st of August 20x6. And so therefore, this premium ran from here on the 1st of September right the way through to the 31st of August after the year end. Our insurance premium therefore straddles the year end. From the 1st of September to the end of December is 4 months, and then after the year end from the 1st of January to the end of August is the remaining 8 months. This expense has been paid and 8 months of this expense belongs to the next year, in which case we have a prepayment. We are told that the insurance premium was $9,000, and so we need to take 8 months, so multiply by 8 over 12 to work out our prepayment. This comes to $6,000, and the double entry for that would have then been to debit our prepayment and credit our insurance expense account. Our debit to prepayments is recognised as a current asset, and so therefore this $6,000 needs to be included in my current asset balance. In the third piece of information, it tells us in January 20x6, which is just after the year end, the company received rent from a tenant of $4,000, which covered the 6 months to the 31st of December 20x5. Again, looking at this as a working, and again as a timeline, we can see with our year end, once again the 1st of January to the 31st of December x5, that just after the year end, we have received rent from a tenant that actually belongs in the current year because it runs for the last 6 months from the 1st of July to the 31st of December. This is income received, and so we have accrued income that needs to be included in our current year. We are therefore going to debit accrued income and credit our rent received to increase our income. Accrued income is a current asset, and so therefore the total amount of $4,000 is going to be included in our current assets balance. My $4,000 can be included in current assets, We can see that there is nothing to include for current liabilities, and so if we total up my current assets, it now comes to 22,240. Looking at the alternative answers that we have, we can see that the third option is the correct answer because we have a 22,240 balance for current assets and nothing for current liabilities.